I'm Danielle Hale, Chief Economist at Realtor.com, and here's what you need to know in September. The economy continues to grow. While the pace was revised down, growth registered roughly at potential in the second quarter, and indicators point to further expansion in Q3. Consumers are an important part of the story, bolstered by a healthy labor market. Specifically, although August saw smaller job gains than last year and unemployment rose, the rate remains low. Job openings and turnover data mirror this trend, with pullbacks in job openings and the rate of employees quitting. Although the job market is cooling, workers are in a good position, and much of the pullback has been in to-be-hired roles as opposed to layoffs. Leftover pandemic savings continue to fuel consumer spending, but after a year of recovery, the savings rate is dropping again and remains less than half of historic norms. In other words, households are still right-sizing their rainy day funds, boosting current activity, perhaps beyond a sustainable trend. Fortunately, inflation generally continues to improve. Although annual headline CPI ticked up in July and is likely to exceed 3% in August, the monthly rates of change, if sustained, are consistent with 2% inflation. Even core CPI, which excludes food and energy prices, improved. Past performance is no guarantee, but recent data have been good. The market is not expecting a Fed rate hike later this month, following July's rate hike, and it would take a surprising jump in inflation to change that. The most interesting part of late September's Fed meeting will be the new economic projections that show just how expectations have shifted since June. Despite improving inflation trends, stronger than expected economic growth bumped mortgage rates higher in August, pushing them above last year's peak to a more than two-decade high. The last week of August saw a reprieve, but choppiness is likely ahead as uncertainty over Fed policy and the economic outlook keeps markets on edge. The summer swoon in median home list price was short-lived. In August, listing price data compiled by Sabrina Speianu ticked up after 2 months of declines. Perhaps the more surprising finding in this month's report is that newly listed homes jumped from July to August, an unprecedented seasonal move. New listings still fell behind year-ago pace, but the monthly uptick could be a sign that more sellers are accepting today's higher rates, or are worried about the possibility of even higher rates ahead. Despite the improvement in newly listed homes, the number of homes for sale is roughly half of its typical pre-pandemic August level. This lack of options continues to split the housing market, holding back existing home sales while builders sell more new homes. Construction fared well in July for both single and multifamily homes, but builder confidence tumbled, which may sap momentum headed into the fall. The number of multifamily units under construction hit yet another new high in July, surpassing the March 2006 single-family peak. These housing units will be overwhelmingly marketed for rent and will come available at an interesting time. Research economist Jai Shu found that the typical asking rent in July slipped for a third straight month. Nevertheless, median rents exceed 30% of household income in 8 of the top 50 markets, suggesting that renters in these predominantly coastal areas would benefit from more affordable rentals. And in case you missed it, we recently released our annual look at the zip codes where real estate is most competitive. My colleague Hannah Jones and I found that while affordability is top of mind, the data also suggests that some buyers in 2023 are willing to pay a premium for larger homes in zips with proximity to major cities. The number one hottest zip code is among the affordable set, 43230, Gahanna, Ohio, near Columbus. You'll find the top 50 hottest zip codes of 2023, along with other details and our housing data for download at Realtor.com/research. You can also follow us on X, formerly Twitter, for real-time updates.